All right, good evening, afternoon, everybody. It is the Sunday Market Breakdown. We are live on YouTube every Sunday, as always. So, hello and welcome to everybody joining. If this is your first time here on the Sunday Market Breakdown, I'm just going to cover off what I do here each week. So, for the last 8 weeks now, I think this is the 9th in the series of the Sunday Market Breakdown. What I do is I cover off my trades taken this week, why I took them, and then we have a look at the week ahead. For those of you who don't know me, don't know who I am, my name is James. I am a Forex trader, and I've been trading Forex profitably for a few years, trying to trade Forex much longer. And I believe that I'm the guy best suited to help struggling traders or people who are looking to get started Forex trading, because I, not so long ago, had all the same issues that everybody tends to have when they start trading Forex. It looks easy, it looks simple in the beginning. There are many misconceptions when starting out, especially the one where you think that you just need the perfect strategy. It's out there somewhere, this magical strategy that's going to come and save you and, make you wonderful. Well, let me tell you this. If such a thing existed, do you not think all the banks, all the big institutions, the private equity, the investment banks, do you not think that they would be trading that strategy? They're not trying to keep it a secret. Do you not think their employees would run off with the strategy and do their own thing on the side? Why not, if they've got this magical miracle strategy? It does not exist. The only thing that exists in Forex trading is taking any strategy. I recommend one that is extremely simple to follow, especially for beginners, and applying it in a live market situation. And then, in order to develop yourself and improve as a trader, the one thing that I bang on about the most to everybody in the communities that I run on school.com is trade journaling. And I believe it is the most important thing for your development as a trader. Without it, you are just randomly taking trades in the market and forgetting what happened. We don't like to remember our losers. We don't like to remember when we make mistakes, but I can guarantee you that when you start actually journaling this stuff and watching or learning from both your mistakes and your wins, that is when you will start to have a huge advantage in the market and you will develop your edge. And it's this edge that you as the trader have. The strategy is not the edge. The trader is the edge. If the strategy was the edge, everybody would just trade the same strategy and be making millions of dollars trading the markets. It's just not the case. So you really, really need to focus on journaling and keeping things simple. So back to the Sunday Market Breakdown. What I do here is I'll do a brief explanation as well of like how I trade. But if you want to learn or you're interested in some of the things that I'm sharing here today and you're trying to work out exactly what it is that I'm using to plan these trades and execute such a high hit rate, the group that you can actually join, I've put together a free training. The link will be in the description, but you can actually go to school.com/leveledfx. It's a growing community. It's still fairly new. Like I said, I've only been doing these YouTube lives now for the last 8 weeks. And I'm starting to see and get really good feedback from people in the community now, where we're actually having some really good wins. So there's the free version, and if you're really serious about leveling up and actually getting involved on a daily basis and committing to getting yourself in a position where you feel confident enough to get funded as a trader, then we have the paid alternative to this, which is essentially the same thing. You just get more access to me, and I'll actually look over your trades and help you develop as a trader. Right now, you can get that for just $47 a month because we're in the pre-launch. I don't plan on launching this fully really until September. So if you do want to take advantage of the current discount, it's $47. It will be going up to $125. I value my time. I make an income from trading. It's not that I don't care about the community. I do. I would love for everybody here to level up. And I tell everyone, like, the best possible thing that you can do for me is to get funded. Show everyone that the approach that we're taking here is legit. the type of journaling that we're doing is actually developing you as a trader, and you're actually getting results. Once you get funded, that's when things start to get interesting. If you're trying to trade a small account, let's say it's $1,000, a couple thousand, up to $5,000, and your strategy is to flip that account, meaning that you want to double it, extract your profits, and then keep doing this over and over again, you can try that, but that is not how professional traders approach the market. And you don't need to anymore, because we have prop firms. And the prop firms will allow you to take their challenge. For $500, you can access $100,000 of capital if you pass the challenge. And if you can trade, you will pass the challenge. But if you can't trade, you won't. And if you do, it will be luck, and it will be unlikely that you'll ever receive a payout. So why not invest in learning the skill of trading? I wished I'd started much, much longer ago. I got started in the world of business, and I ended up selling a business later on. But I didn't start trading till much later, and I wished I'd started much, much sooner. But, you know, that is life. And so anyway, that's my spiel on Leveled FX. So if you want to join that, it's school.com/leveledfx. Some really cool stuff in there. And yeah, just go check it out if you want. But anyway, without further ado, we'll get into it. So trades I've taken this week. I'll do a brief explanation for anybody that's new, how I trade and how I approach the markets. I see we've got some people here from within the community already. That's awesome to see. Hello, it's good. How we doing, Eugene? Josh, good to see you, man. Man, it's late for you, right? I appreciate staying on and joining the call. That's awesome. Mihal, hello. And I forget your name. You can post a comment telling me your name there. I swear you've changed your name since last week, but I recognize that profile picture. Anyway, yeah, so a few trades this week. Man, it's been quite the week. It's been fairly Robel. Did I say that right? Robel. It's been a fairly interesting week. August is typically, well, it's supposed to be lower volume in the markets because, you know, everyone's on holiday. I don't believe in that, but it has been lighter on data releases, so not so much news. But still, we've had a lot of dollar weakness across the market, and the big question is, when will it end? So we've had dollar weakness, gold is at all-time highs, and yeah, just a bit of a mixed market. Not the easiest one to trade, but still the level beta system that I teach, my approach. It's really like, I don't even like calling it a strategy. It's essentially, jump over to the charts here. Wait for a strong move into a level. So up here, I've identified, we're looking at, I'm not going to do this on Bitcoin, Christ. Let's look at this. Okay, so GA, pound Aussie, a level on here. So looking at the 4-hour chart right now, and I typically trade the higher time frames. So what we're looking for is a strong move into the level, essentially the big money pushing the market up. And then what we'll typically see here at this level here is profit taking. We get in on the profit taking and we ride the pullback. How I take profits is the first area of potential struggle. So where is the market giving you the opportunity to take profits? As the market moves up, it doesn't move up in a straight line. What tends to happen is, although it can be a strong move in, you will have these ledges formed, right? And so as we move into the level like this, I would expect the first area of potential struggle to be somewhere around here. Why would I think that? Well, if we're entering up here, and this is where we're expecting the pullback to occur, let's put that as an entry. Price, as it comes back into where it has struggled before, is likely to struggle again. And so whilst price can continue going in the direction that we're selling, right? In this case, because price has moved up, so we're entering sell positions to go in the opposite direction. Price can continue on down through here. And if it does, we can leave a partial trade running, right? But the idea is to secure a good portion of your profits here every time. And if you do that, you will have an incredibly high hit rate. We're not going for 1 to 5 risk reward, any of that nonsense. Well, it's not nonsense. It is great. If you trade like that, that's great. Good for you. But I don't think it's very beginner friendly because it invites a lot of potential losses. And that's hard to take when you're a new trader. I think for me personally, I struggled with that a lot. I did not like losing. I couldn't seem to grasp the concept of, trading is probability based, and in order to have that edge play out, you need to take losses. It's all part of it. But I just found like it just affected my psychology in such a negative way that I was unable to follow it in a way that allowed me to take profits consistently. The way I trade now, I think, is extremely beginner friendly, because we're doing it in a way where you're actually taking profits on a very consistent basis. They're not huge, they're not massive wins, but each time, you're taking, I don't even want to say how many pips, because it depends on the pair. If it's a yen pair, you're likely to take 60, 80 pips, something like that off a move. If it's a Forex major, maybe it'll only be 30, 40 pips, something like that. But anyway, the point is, in terms of percentages, I don't really pay too much attention to it. I know that I have a high hit rate. I know that the approach has a high hit rate, and therefore I don't use stop losses in a traditional sense. I have them on my account, obviously. Anything can happen. And if anything can happen, I want to make sure my account is protected. But on a trade-by-trade basis, I'm not having extremely tight stops. That's not how I trade. I work on the probability basis. So if I do have a loss, it usually is, well, if I have a loss and I actually let price come all the way to my stop, I'm a pretty crappy trader, because as soon as my trade idea is invalidated, and it will become invalidated by either a new market driver, in the market, like something has changed from my initial reasoning for getting into the trade, or I've seen price action do something that suggests something is about to change, and I may decide to exit the trade at that point at a small loss or break even or whatever. But that's essentially it. Strong move into a level. The levels are typically daily, weekly, refined to the 4-hour candle body close. That's how I like to do it. And the guys in the community will vouch for me when I say, like, these things just play out. We've got people now actually taking these trades on small positions, on small live accounts, just to get used to it. And we're seeing 100% hit rates. And I'm not at all surprised. I am impressed that people can do that from the beginning. And it just goes to show that the training that I'm providing in Leveled FX is actually working. And people can listen. That is a surprise to me. A lot of people try to do their own thing, and it's just not going to help you. So if you are serious about learning the skill of trading, go ahead, sign up. It's free, and make it your last stop. The worst thing you can do to your progress as a trader is to strategy hop. And that is, you come in, you see that I'm not going to tell you that you're going to be driving a Lambo in 6 months. But you're actually, if you follow a process, you can get funded in that time. And if you can continue to follow the process, you will actually replace your income with Forex trading. And once you've replaced your income, you can spend a whole lot more time doing the boring work that's necessary, which is trade journaling, learning from the market, watching the market, and actually documenting what happens and how you can further increase your edge. If you do that, guarantee you will start stacking funded accounts, and before you know it, you'll have a few $100,000 that you're trading, and you're not going to be trading with huge sizes trying to double the account, because it's just not necessary. You need capital to trade, but just stop with trying to flip the accounts. It's not what's the way to say it? It's just not going to work out for you long run. It's short-term gains. You might win, but you're better off going to the casino, to be honest. So anyway, that's a whole lot of waffle about my trading approach. I do that just because a few people have mentioned to me that sometimes I get straight into the trades and I don't really explain enough about how I approach the markets. I thought that I didn't need to do that, because you can just go ahead and join Leveled FX on School. It's school.com. That's school spelled SKOOL.com/leveledfx. I feel like I'm talking about it all the time, but still people ask me, like, where's the training? So you can go here and you can jump into the classroom. There's a Start Here course if you know absolutely nothing about Forex. If you do know nothing about Forex, so far I'm seeing that the people that have got no knowledge are getting the best results. And I believe that's because they don't have all this other strategy crap in their head from other places, other people that they've listened to. And so they can just dive right in and just take my word for it and just apply it. And they're applying it and seeing how it works and going, okay, I get it. So anyway, that's enough of that. If you want to join, go ahead. I'll post the link below. Otherwise, go to the URL I just talked about. So this week's trades. I'm going to start with the dollar yen short. This isn't a typical trade for me, and I don't want to confuse people with this, but I'll start with this just because I posted my actual broker screenshot in the paid group earlier this week to explain how you can trade the markets using the same approach that I take, and get to a point where you can stack positions. Because again, like I said, first area of potential struggle is where you will take the majority of your trade. However, I don't take all of the trades, so I leave a runner. So on dollar yen, for example, I've been in this trade since the, I think since, the 15th of August. And it's currently running about 467 pips. Now, that seems like a lot, but bear in mind that I have a smaller position running on it. So I've actually left 20% of this trade running. I initially took my profits around this level here because this is where I thought price would first struggle. I was correct. That's where we consolidated. Once we consolidated, we pushed back up into an intraday level where I took another short, much smaller size. This wasn't the same sort of size I would take from a stronger level. But what I'm looking to do here on the yen pairs is actually build a short position because I have a bias that it's going to go down. It went up for a very, very long time. And so I believe there's a lot of a pullback to occur. And I wouldn't be surprised if we got down here to this sort of like where we started the initial push up last time. And we're still on the 4 hours, so I think it's actually before then. But as you can see, it's just been rallying and rallying and rallying. This is in alignment with the Nikkei as well. So the Nikkei has been pushing up. This is the Japanese stock market. It correlates very nicely with a lot of the yen pairs. And so I do believe that we're reaching a point now where we're likely to start pulling back from. So yeah, I'm just looking to build a position on dollar yen. And so my reasoning for the trades taken here, this is the one that I took this week. If we actually drop down to the 4 hour, you'll see why. So we pushed down off this level. We formed a level at the 4 hour level. And as we moved back in, let me go down to the 1 hour. Maybe it's a bit more clearer. Yeah, so price moved away. We moved away decent amount, 100 pips. And then we actually moved back into the level. And this is a classic. It's kind of like... not even like a break and retest because there's no break here, but it's just kind of like retesting the resistance before going lower. And so this, I didn't take this trade just on that. It was also in alignment with the Japanese stock market at the time, which has been just creeping up and up and up. And I believe we are going to see a big sell-off in the next week or so. So again, that's why my positioning on dollar yen is short, and I'm looking for opportunities to get involved with that. And so when I saw a pullback like that, I actually did get involved a bit earlier, which I took a break even on. I didn't bother posting the trade as something to talk about here because I got wiped out by this wick. So I got in around this level here. As price moved down, we then had, actually, I think we had a correction to some data that was released this week. I'll cover it when I look at the economic calendar, but it caused a big spike on the dollar. And so that ended up, once I cashed some profits on this already, my runner was taken out on the dollar yen trade from here. So that can happen. Again, like anything can happen in the markets, right? So the fact that I've got these two trades running allowed me to take these more risky trades. So I want to say this, so that it's clear. I would still only wait for the strongest levels to get involved in the market. And I posted this to the paid group to explain that once you're in these, once you have these running positions, when I took this trade, I already had this trade up here running 300 pips nearly. So if anything went catastrophically wrong at this point, I could always just cash that trade to cover any losses here. And so whilst I don't want that to be the case, and that's not why to get into the trade, I'm not getting into a trade to thinking that it could lose, right? I'm getting in because I still think it's a strong opportunity that's going to go down. I've been watching this stuff for a very long time. But yeah, the fact that I've got these two running trades, both running more than 100 pips, everything that I do now lower down is kind of covered by that. I don't want to have to cash them because I'd much rather run them all the way down. But I don't know what's going to happen, you know? So they're there if I need to use them, but that's the dollar yen trade anyway. Nothing special on that. Pound dollar short. Geez, pound dollar has been an absolute nightmare this week. I know people in the community have been trying to short it. The problem with the pound dollar right now is it's like euro dollar. It's extremely reactive to dollar strength and dollar weakness. Dixie. Yeah. So here I've pulled up the dollar index, and we've just been heading south on this thing for a long time. Friday, we finished up tapping into these lows, but we've still got a bit further to go before we hit the weekly low here. So this is my weekly level. It's refined to the candle body close, as you can see here. Right there. And so keeping an eye on this, because that is a major price point for the dollar index to rebound. And so if we get down here, we're more than likely going to see a bounce. I don't know how big the bounce will be. I don't know if it will be short or if it's actually turns us around and we start heading back up. But based on how the US data has been coming out this week, I'd imagine we've probably got a bit of falling to do. There'll be some times in that when we can actually recover from some of the, the dollar can actually recover with a small pullback. But over the long run, I think we're starting to see, at least in the data, the US economy recovering. At least that's what they say. But we have to go on what they say, even if the numbers are fudged or whatever. The fact is the data that's being released looks positive, which means, or most likely means, there's going to be interest rate cuts. And if there are interest rate cuts in the US, we're going to see an even weaker dollar as people move their money out of cash and into assets. So we'll see stocks rally. We may see more safe havens rally, like gold, silver, etc. So that's how I sort of combine the charts with what's happening in the world. Like, we don't need to be completely ignorant to fundamentals. Fundamentals play a huge, huge part, and they keep you safe when trading the way that I do. So understanding what's going on over there doesn't take a lot. I am not a financial person. I do not have a financial background. I'm barely educated, right? So I learned this stuff, and you just learn by watching. You just go to the calendar, the economic calendar, and you can see this stuff. It's the same things that repeat week on week. PMI, interest rate decisions, Fed speeches, GDP reports. It's all there. Really boring stuff. But you can learn this stuff just by watching it over and over again. Let me just plug my camera in here. It's learnable, and you don't need to go to some fancy course to learn it. Just watch what happens each time one of these high impact red data releases occur and journal them. Like, write down what actually happens when this stuff happens, right? What happens to the dollar? What happens to the pairs that you like to trade? You see if they have a major impact or if nothing happens, and you just write that down, and you see there's patterns here that happen over and over again. Anyway, back to pound dollar. So the Dixie's just been falling off a cliff. So at some point, we have to have a pullback that's a little bit more than something like this. And so back to pound dollar. This week, there have been many levels that have been hit and smashed. All right. I was in one of them. And then I just decided to sit it out because it became very unclear what was going to happen here. The actual trade to take on pound dollar this week was the daily level, situated around the 1.3126 level. So if I go to the daily chart, you'll see this over here. Refined to the candle body closed, where price moved off. So price did actually come up here, and this is the green line here, right? So if I drop down to the lower time frames, we'll see that there was an opportunity here. If you were to take that daily body candle close, price did actually deliver 48 pips off of that level. But it was just far too uncertain for me. The dollar index had a long way to go at that time, and it was sort of hovering around here. And so wasn't for me. And then Friday, we just saw another drop. But I was pleased to see that we actually dropped into this 4-hour level that was refined from over here. And so I did expect a reaction from this, which we saw, but we're consolidating once again. Will we drop lower? Probably. Before a pullback? Not sure. We've got all of this movement over here. I think we could see a bit of a move back up to test the weekly level before coming down here. And if we see that, if you're in any dollar longs, I know some of you are, that could be enough to get you your pullback and to cash your profits. But I wouldn't be looking to hold any long-term dollar longs, like pound dollar, not longs, pound dollar short, euro dollar short, Aussie dollar short, for example, the Forex majors, because I do think we will see a bit more dollar selling off. Could be totally wrong, of course. My opinion is just that. It's my opinion. We could smash through this level, do a bit more of a pullback up to these levels before then coming down. Who knows? We've got a very, very light news week this week on the calendar, so there's not really much data to push price around to where we might see some bigger moves. Also, there's a bank holiday Monday in the UK tomorrow, so again, less volume in the market and extremely light on the economic calendar. So, intraday levels are most likely going to be working. Consolidation levels are most likely going to be working because there's not going to be that movement unless we see something interesting happening on the dollar. This week was light on news, kind of. I think we did have some PMI. We had some CAD news on Tuesday, but we still saw this big sell-off on the dollar, which has just been the theme for the last couple of weeks. Anyway, pound dollar. Jeez, I'm really waffling on here today, but I say this stuff because I think that's the stuff where you guys get the most value rather than me just going, hey, look at the money. Well, not even the money, but look at the trades I took this week. The trades I took are the same trades I take every damn week. We wait for a strong level. This was the 4-hour level I was looking at on pound dollar. I got in on this on the Tuesday and decided to close it at what I thought was a pretty decent area of potential struggle, given the fact that the dollar index was looking very uncertain. My reasoning for getting out at this point and not continuing to participate in this freak show was partly because of the way we got up here. So I couldn't ignore this wick over here. So from the actual trade, managed to cash probably about 18 pips off pound dollar there. And the way we were moving up just isn't what I like to see. It was kind of, we creep up, we move back, we creep up, we move back. And then we did push slightly heavier into this level, but still I could see this just continuing. So ended up just taking a mere 18 pips on pound dollar. I didn't like it. I was very pleased that I did decide to do that. But yeah, that is why the first area of potential struggle cannot be ignored. Look at how price got in here. You cannot expect pound dollar to just reverse because you want it to. It is a level, it will provide a pullback, but you have to respect the structure of the market. You cannot just go, well, I want 30 pips, and that's my strategy. I take 30 pips on every trade. Like, that's too mechanical. You need to play to the market. Where has the market left its footprint behind? And if that's where the last push up was before where the consolidation was, that's where I'm going to take those profits, because that's where the market's going to allow me to. Would I take that trade again? Probably not. Just because of how price moved in there. I didn't actually expect us to start messing about here again. I thought from here we'd probably just smash right up, and I was looking to take that on the trade, which would have been a 33 pip move. But yeah, what happened, and that was it. That's the dollar trade. So if you guys got any questions about that, you can pop it in the comments. I'm happy to go back over anything. Wednesday was I always laugh at communities or trading educators that offer a live trading session, because like how can you possibly do that when the market just does whatever it wants? Like, you can't rock up to the charts and be like, right, it's 10 a.m. on a Monday, we're going to trade pound dollar and we're going to rinse some profits. How do you know that that's possible? The market gives the opportunity, not you deciding that you want to do a community call on a 10 a.m. Monday and charge people for the privilege. It's ridiculous. Anyway, the reason I mention that is because on Wednesday we had our midweek review call with the community. It's in the free group, so you can actually jump on that if you're just a member of the free group. It's really kind of fun. Same guys turn up each week, and we just chat about the market. I look at any trades that anybody wants to have looked at, and yeah, that's kind of it really. But because we were on that call, got an oil setup that came in. So we had this really nice move on oil into a very obvious 4-hour level just over here. So these are the type of trades that I absolutely love and do all day long. So strong move in. Getting towards the end of the day, I do the midweek review call. I think there's 7 p.m. London time. So it's an evening trade. It just so happened that it was on the call. And I just called it. I said, yep, hang on a sec, guys. Just hopping into this oil trade. I've been waiting on it if price got there. If I put average true range on the chart, you can see that we didn't quite hit it. Average true range, for those of you that don't know, shame on you for not already joining the free group and going through the course. But anyway, average true range is just a nice way to see how far price has moved compared to its usual maximum range for a given day. So what this does is it looks over the last 20 days of the market and plots a level of how far price is likely to move based on how far price has moved in a given day over the last 20 days. So one of the things I'm looking for when actually taking a level is price overreached? As in, is it overextended? Because if it is, there's more likely to see a pullback. But when you've got a level just staring at you in the face, as obvious as that, with not really much else going on, unless we were to drop down here, which I suppose we could have done, but I just feel like we had such a strong move off this level that it had to be looked at. I ended up taking cash in profits at the first area of potential struggle because that's what I do. And that was here. We had to look at this level just here. Just a sec. It was 55 pips I took on this. So let me just see where that was. It was here. Yeah, that was right. So before we moved in, ended up taking profits just here, which is where we then pulled back, and then price has just gone on to go all the way parabolic up to here. I was actually waiting on this level for the sell. I cashed my runner as we got up there on the Friday. And yeah, that was pretty much it. So when you've got a level staring at you in the face, as obvious that, take it all day long. So yeah. Oil. Pound CAD short, 1.7817. Pound CAD, 1.7817. That's you, 7817. There you go. Was this on the Tuesday? No, it was on the Wednesday. But price moved off of the CAD news. So what did we have? It was CAD something or other. So guys, this is how detailed I am about fundamentals. That was right. It was CPI on Tuesday. So basically, inflation numbers from the Bank of Canada and Bank of Canada CPI on the Tuesday, and this really got the Canadian dollar moving a bit, and so we pushed up to this level up here, and ended up taking that on just on the Wednesday. It looks like price missed me on this, but it actually triggered me in. I think again I was on the call at the same time that I took the oil trade. So this was 8 p.m. On the Wednesday, and I think I said on the call that, oh damn, it's just missed me. And then I checked my watch list, not my watch list, my the trades that I was in, and I had actually tagged me in. So this tagged me in, and we were out of that at the first area of potential struggle. Same thing as always. So look, price pushed up, it consolidated here. Like there was some business done. You can see it on the lower time frames. It's what I always say to people: just go down. Look, it creates a shelf. And that is where price is going to struggle. So take your profits here, a partial. So I closed a partial here, and then I ended up taking a break even. I had my stop loss just moved above this high after I'd taken my first area of potential struggle. So -2, -3 pips, something like that. You got to leave a little bit of risk on. No point moving it to break even, because the amount of times that price comes back and moves off again, and I'll show you this on the New Zealand CAD trade that I took, and the runner did its work on that. So anyway, that's that. hop over to pound yen. I've not actually put the New Zealand CAD trade on here for some reason, but this was it here. So don't mind me. Keeping it real, guys. This was it here on, I'm pretty sure it was this week. Yeah, Wednesday the 21st. So it was the same day. It was a CAD move, and I ended up taking New Zealand CAD because we'd had a lot of New Zealand strength. So New Zealand CAD had gone the furthest. We had come right up to average true range, and so this was the 4-hour level that I ended up taking. I took first area of potential struggle here. I could have put it a bit lower, I suppose, just above this. It would have just tagged me here, but I was just cautious of where price had formed this high over here. And so that's where I ended up taking the initial profits on that. So that was a 34 pip trade. Then price came back and then did its thing. So that was that. I don't know why I haven't put it in here, but I should have done. Anyway, I'm only human. I just know that I had that New Zealand CAD trade this week. Pound CAD, pound yen. This was a nice one. Pound yen. I love how the yen pairs move. They move fast. So 4-hour level just over here, formed on the 16th of August. So it was last week. Again, I'm slightly more aggressive on the shorts with the yen pairs. So if this was any other pair, I probably wouldn't be getting involved in doing business here. I would much rather see us push higher, make a new high, and then receive a pullback from that. But when it's pound yen, it moves very quickly. So if I've got a pretty reasonable first area potential struggle, I will end up taking it. So I think this one was like 60, 70 pips. Yeah, I ended up taking 68 pips off of this one. 4-hour level, strong move in. It looks like nothing on the chart for pound yen. It's a 200 pip move up, which is decent. Like it delivers the pips because it moves the most. I was pretty sure that we were going to see a reaction from that level. There was some timing with the Japanese stock market as well, which is what I always try to use when I'm entering trades on the Japanese yen. So yeah, I'm short dollar yen. I'm short pound yen. I think with pound yen it will be shorter lived, just because the pound is still driving up. We'll just see what happens with the pound this week, but still drop down to the lower time frame. We can see quite clearly on this that as we go to the 15, price formed a level here, and then we pushed up into this region. This is kind of like a big consolidation area, but as you can see, when price hit this, it didn't mess about too much, and it did the pullback pretty nicely. So it pulled back a little bit deeper than my first area of potential struggle, then came all the way back and came back down and hit my second area. So my second area managed to catch 125 pips on, and that was it. Full trade closed out on that. But that was pound yen. So just the same old stuff, guys, levels. And the only reason I know how to trade pound yen versus other pairs is because I've got a journal full of trades that I've taken and that I've learned from, right? So again, if you keep this stuff simple, there are things that you will see each week when you look back on your trades. This week, I've been looking back at my trades from the entire year so far. So I've gone all the way back to January. I started trading the second week of January this year. First week I was in Thailand, and doing all kinds of Thailand things. If you've ever been, you understand what I mean. And it's not great trading conditions when you're doing Thailand things. So that's why the second week. But regardless, there were many lessons, even for me in there. I actually went back over my break-even trades from the last year to see if I could learn something from them. And I pulled a few nuggets out of that, which I'm hoping to take forward into my trading this week and next and into the future. And so that's the importance of journaling. It never stops. I am by no means the best trader in the world. I can strive to be that, but I just know how hard the guys at the top, the guys that are pulling like 100, 200K weeks out of the markets, they're the guys who are like staying late, after they've already finished trading for the day, journaling their stuff, seeing if there's anything they can learn from it. And then on the weekends, in the mornings, I like to go back over everything and try and actually work out how I can improve myself moving forward. And that's what everybody should be doing, because that's the only way to keep growing. You will have weeks that are not as good. Maybe you don't get as many trades, but you've got to keep up with this process. This is what will keep you having those aha moments, especially in the beginning. Like, there's so many things you will do wrong in the beginning that you'll just have a mountain of like a list, as long as your arm, showing you all the stupid things that you did, even stuff that you said you weren't going to do. I guarantee you will do it. But when you see that enough times and you continue to do it, you're stupid. Or you learn, right? So that's it. If you really can't learn from what you've journaled, then maybe trading isn't for you. You know, I'm not here to preach that everyone should trade. In fact, I think most people shouldn't. But if you can stick with it long enough and you like getting punched in the face every week until you get good enough, then it's definitely for you, man. Like, definitely for you. Pound Swiss. Let's have a look at that. That was another trade. It was a cheeky one, quick one. This was in alignment with pound yen, actually. So I think this was around the same time. That was 12 o'clock and pound yen was 12 o'clock. Yeah. My memory serves me well. So on this one, that I should have been in 100%. I wasn't. So let me just drop down the time frame so it's a bit clearer. This level up here, let me see what the 4 hour was. Yeah, so there was a 4 hour level here. If I just refine that slightly to here, you can see price just tapped into it and then made a really nice move away. 32 pips on a Swiss pair in a day is unheard of for a pullback. So that was a really nice move on pound Swiss. I caught it a little bit earlier. I didn't catch as many pips, unfortunately, but it is what it is. I just traded the market. You know, I'm not looking to make as many pips as I possibly can. I'm not looking to run every trade 100, 200 pips. Like, if you think that if that's your approach, like, you will lose most of the time and you'll just be down and out, and then you'll quit. And when you quit, you'll never make it. So don't do that. First area of potential struggle. Price moved up, consolidated, strong move in to the level that I wanted, refined to the 1 hour, entered the trade. We also had this kind of like 1, 2, 3 third touch thing going on here, which isn't like, I don't even like having it on my charts because I don't want to confuse people. But ideally, like, the price, price and how it moves does actually give you signs about what the market's going to do. Reading price action is something that will come with time, by watching how the market moves. And I don't mean like watching the market like all day, every day. That is not what I mean. I mean looking back on your trades and seeing how price got to your level. There will be clues as to whether your level has a higher chance of working or not based on how price gets there. So for this, I really like the fact that we'd pulled back here and then we had this really nice strong move up for the Swiss pair into the level, which then actually gave a nice pullback into what I considered the first area of potential struggle there. So it was just 18 pips, but it's a Swiss pair. Like, what do you want from me? Like, Swiss pairs, I don't typically trade because they do not deliver the pippage. There are better opportunities in the market. I just saw this timing with the pound yen, pound Swiss, pound dollar were all doing their thing around this time. And so that was my reasoning for entering that trade, as well as, of course, that it was a level to be traded. Dollar CAD, let's talk about this one. Dollar CAD was another Friday trade. I call this the trying to catch a falling knife. So with dollar CAD, yeah. This is how we finished up on Friday. We've got the daily level just below a weekly level. Let's just zoom out and see what's going on with dollar CAD so you can see what I'm talking about. All right. So dollar CAD is at a really strong move down. It's mostly been fueled by the dollar weakness that we've seen across the market. So we're comparing this to the dollar index. The dollar index hit its level, the 4 hour level, this wick down here. Let's not talk about wicks. We talk about levels, not wicks. So this is the level refined to the 4 hour, which I already mentioned. but I'm mentioning it again because people will ask me, even though I think I've said it 1,000 times, I will repeat myself. So that's the dollar index. And then going back to dollar CAD, yeah, we have, let's go to the weekly. Right, so weekly, so when we've got a gap here like this, it's like a 10 pip gap, I always refine the level to the previous candle body close because I believe that is the true candle body close on this. So anyway, that's the level that we were looking at. The way price moved into it, I thought, well, let's try and be a bit more conservative about this and let's try and get a bit closer to where I think price will fail, just because on the weekly we've got this wick that is, well, if we include it from the candle body close, we've got a 60 pip wick on that weekly candle. If we go to the daily, there's also a fairly big wick. Again, same thing, price gapped here between the weeks. So it's then you can refine it to 48 pips on the 4 hour. And this is the process I go through to actually refine my entry. On the 4 hour, we've got a much lower level, which is just in here. And that's where I'm going to have a second crack at dollar CAD. So what I've done on this is, because it's quite a big zone and a wick and trying to catch a falling knife, I've actually created a zone from the daily to the 4 hour, which is like this. And there's a 42 pip zone there. So what I've done is I've split my risk. I've entered with half risk from the daily level, and my plan is to go with another half risk from my from the 4 hour level here. And so we're just going to see how this one plays out because no one knows. I'm expecting a pullback from the dollar because we did just get very short on the or very bearish on the Friday, but you know, I can say whatever I want about this. I'm talking about it because I know guys in the community had seen this level, and it's a valid level. It's a very valid level, and you would be absolutely right in taking it. You just have to be very aware of this one down here as well, right? So that weekly kind of level is where price really moved off the first time. Then we came back, retested a bit higher, which was kind of like the reasoning and why I thought this weekly level might work a bit up here. But no, it's come a bit lower down here now. So we'll see. We will see. So anyway, that's all the trades from this week, including the New Zealand CAD trade, which I didn't add in here. Any of you guys got any questions? Anything you'd like to share from the week? Anything you'd like me to go over? Anything that's unclear? Maybe you'd like to know what I had for dinner. Anything really. I'm here for you guys. I do these because they're a bit of fun. I like to cover off my week. It's good for me. I tell you what, my trading, I've seen an uplift in my own personal trading since running the communities. I think you guys holding me accountable and me knowing that I've got to actually format what I'm doing and how I'm thinking into teaching it to other people. It really helps to hone your own craft. So yeah, I'm personally seeing benefits to my trading already, and I've actually I've taken more trades on average than I usually would, which I would usually question and be cautious of, but in this case, everything is completely by the book. There's no different types of trades in there. I'm just seeing more opportunities because, you know, firstly, you guys are asking me about opportunities that you've seen, and it might have been something that I missed previously. And if it's a good setup, like I'd be like, yeah, sweet, that looks good. I'll also entertain the idea of doing business at that level. So yeah, it's been really good so far. Rebel says, I'm waiting for my entry on Bitcoin. Oh man, don't talk to me about Bitcoin. I buy and hold Bitcoin over the years, but I don't trade it. It's too whippy for me. Look at this wick. Come on, man. Like, what are you going to do with that? Like, I mean, levels work here as well. The same thing applies. You can apply the level-based system to Bitcoin. I mean, look at me, like a pro. I've got my I've got my chart marked up here. Be dead if I traded that weekly level. This one, not so much. Don't mind that drawdown. I think I should open Discord. Nah, man. I have a bad enough time of dealing with the spam and the scammers on school.com. You know, every day I get somebody who signs up with like the name Pete Smith, and then within an hour they change their name to James Downton and start impersonating me and messaging all the other members. Every single day I get that. It's relentless. Or some guy, bless them, they come in, they don't even try and hide it. They're just like, oh, I do drop shipping. Hey guys. And it's like, dude, you're in a trading community. Like, what are you doing? The guys here are here for another reason, but doesn't stop them. They still join up, and they want to spam you with their link to sign up for how to make 100 grand in the next 2 seconds on Shopify or something like that. So yeah, it's really not the place to do that, guys. If you're watching this, please stop impersonating me. The only me on school is me. There's nobody else with my name that I know. So yeah, just please stop doing that. Right, well, we're kind of coming up to the hour. Let's have a quick look at the economic calendar, the week ahead. It's always a laugh, isn't it? 25th to the 31st. Jeez, another month gone. It's been a good month. Let me tell you, the first couple of weeks of August, people say, oh, I don't trade August. There's no volume in the markets. Like, shut up. Just show up, do the same thing. If the market slaps you more than it should, then sure, stop trading. But if you show up and everything's still just playing out the way it should, then there's absolutely no reason to not trade in August just because other people have said don't trade August. If any of you have ever heard that, I hear that a lot. August or July. I suppose you've got to take a holiday sometime, right? But I honestly think that if life's good and you like your life, you don't need too many holidays. I don't want a holiday from my life. I like it. So anyway, next week, we've got nothing tomorrow. It's a bank holiday Monday in the UK. So August bank holiday. Expect the M25 to be absolutely rammed. For any of you living in the UK, don't even try and travel anywhere. Everybody will be heading to Cornwall with their buckets and spades. Probably it'll be raining. So yeah, Monday there's absolutely nothing. Tuesday, absolutely nothing. Wednesday, we've got monthly CPI on Aussie dollar. Don't expect much from that, to be honest, but let's keep an eye on it. Thursday, a bit more stuff. So this could be good. We've got GDP on the dollar in the afternoon. In the morning, we've got Euro CPI. That could be quite interesting. Later in the day, we've also got Tokyo CPI. So that could be what tips the yen into a downward spiral. Let's see. I need to go over what we're expecting there. I can see the numbers here that previous was 2.2, but no expectations on that right now. But again, when you don't know what the market sentiment is, go to news websites, go to Twitter or X, sorry, and find out like what people are thinking about a particular new data release coming up, because it can tell you a lot. The charts will tell you a lot, but when you put two and two together, the market sentiment, even though it could be wrong, because let's be honest, no one knows exactly what's going to happen, but it just gives you a nice idea of like how the market is feeling. And it sounds a bit wishy-washy, but it's what builds your intuition on what's potentially going to happen on the charts. So definitely utilize that. Where do we get to? That's Thursday. Yeah, Tokyo CPI. And then Friday, we've got Aussie retail sales. That could be good. And especially, also bear in mind, when there's a very light data week on the economic calendar, expect things that don't usually do anything to the market to do something, because the market's just waiting for anything. It's just going to be more sensitive to data because there hasn't been any. So bear that in mind as well. So execute with precaution from Wednesday. Monday, Tuesday, there's absolutely nothing. Euro retail sales as well on the Friday. What else have we got? Harmonized index of index of consumer prices for the euro on Friday as well. So a lot of like consumer pricing stuff happening on the Friday, and we've got that on the euro. We've got GDP on CAD. That could be interesting. And we've also got, so we've had CAD weakness in the past week from Tuesday. It looks like the bank's going to be heading towards an interest rate cut, which will be bad for the Canadian dollar. The economy, they say, is getting better. And so usually following that will be rate cuts. Rate cuts are not good for the currency. It's good for anybody with loans, but it's not good for anybody that's earning from the loans. So most likely investors will move their money into assets and out of the currency. So things like gold, we're going to see spike. Then we've got dollar, consumer expenditures. That could do something. So yeah, Wednesday, Thursday, Friday is where we're most likely going to see some movement in the markets. Probably nothing on Wednesday, to be fair, but Thursday, Friday, definitely things should get a bit of a move on. Even some movement on yen pairs, potentially. So be aware of that. Expect the intraday key levels to work. So what do I mean by this? Let's get off Bitcoin. Let's not turn to the dark side. There's enough opportunities with Forex, people. We don't need to be trading that stuff. So intraday key levels, these are levels that are intraday. So you've got the daily candle body close here. Up here's a daily level. Down here's now a daily level. Down here's a daily level. Up here's a daily level. So these are kind of like the swings between the highs and the lows. And so everything in between that, I would class as a intraday key level. And what you'll find that when there's a very quiet market is the levels will actually work quite well from these intraday key levels. The first 2 weeks of August were like that, and they were extremely profitable for me. This has been one of the most profitable months for me this year. If I look back on everything from the last couple of years, August has always been quite good. So not the best, but this month has actually been really, really good for me. So, and I think that's down to trading a bit more of the intraday key levels when the market's quiet. So definitely don't ignore that. It is more advanced, and you do invite more drawdown and potential losses. But when the market's quiet, it will work. Just know that when the market conditions change, you need to be very aware of that change so you don't get caught out. Still taking the same levels because they work this week. And then next week, let's say Monday, Tuesday, Wednesday, all those levels work. You absolutely clean up. And then Thursday, Friday, all the data releases start happening. You still go for the intraday key levels and you just get smashed. So just be very aware of that change. Other than that, that's kind of all I got for you guys today. Rebel, you said, if you open a Discord, the members can share our analysis on Discord. Yeah, you can. You're free to do that in the school community as well. I know it may not be as comfortable if you are used to using Discord, but I just know the problem with Discord is that there are a lot of spam on there. Payment declined on something. There's a lot of spam in those groups, and so I don't really want to invite that into the groups here, just because there's already enough of that going on. So anyway, if you guys have all questioned out, then I'll go ahead and wrap up the call here. But it's been great to have you on. It's been great to share the stuff from the past week. If there's any way you think I can improve these calls, please do share that in the comments below. I do enjoy doing them, and if they benefit you, then I'm even more happy to hear that. So anyway, guys, have a great rest of your Sunday. whether it's still the early day for you or whether it's late into the evening. Yeah, have a good one. See you next time.